Hello traders and welcome to another video review. Today is Monday, February 12th, 2024. Let's take a look at the economic calendar at the beginning of the new trading week. I have marked only the medium and high important events. So what do we have here? We have the data from the Turkey unemployment rate on 8.8%, so almost as the previous one, 8.9%, slight drop. Now we got plenty of speeches today. It looks like a quiet day in terms of the in some kind of economic data releases. Nevertheless, we are going to have plenty of the speeches. ECB Lane will give a speech. Then we got European Union economic forecast. This is apparently one of the one of the most important events of the day. Eurogroup meetings starts at 11 o'clock officially. Then again, 2:15 we got ECB Lane speech, and then we got speeches from the FOMC member Bauman and Kashkari around 3:20 and 7 o'clock. Then at 8 o'clock, another event of the day, federal budget balance data release from the US, and that's it. Basically, this is not very busy calendar for today. Nevertheless, let's get to the technical part and do the tour of the major currency pairs, and let's start with euro dollar. So the euro dollar 4-hour time frame chart. So what do we have here? The first thing we want to notice is that we've been trying to bounce from the 1.0722 technical support zone, which is apparently happening. As you can see, we've bounced towards the first supply zone, then we get rejected and tested this trend line again. I don't think it will be much of the use these days. All right, so let's just remove it. Now we bounced again from the upper demand zone level 1.0744. We made today kind of a new local high 1.0806. Okay, that's fine. Nevertheless, as you can see, potential double bottom after the hammer pattern was done, then the test, then the bounce. And we are doing this, you know, up and down, up and down. This is corrective. This is corrective in nature. We can apply line here, you know, just maybe even, you know what, we will do the channel, because I can see it from here that maybe some sort of the parallel channel might be helpful. Why? Because this parallel channel is of course another evidence that this market movement is purely corrective. As you can see, blue channel corrective. So this movement to the downside that might look like a kind of a falling wedge or something like this, it doesn't actually materializing just yet. We got A, B, C, or maybe some, yes, A, B, C should be the best pattern that we have on the euro dollar these days. How much did we retrace? I guess that this retracement wasn't much than the other way around. We didn't actually retrace more than, let's say, 38%. Not, I don't think that was even 38% whatsoever. So let me just move it here, and the movement to the upside, and we can see, yeah, 38%, a little above 38%, almost 50%. Right, so almost 50%. 1.0812 is 50%. 1.086 is the local high, so 6 pip miss of the 50% retracement. That's not too bad whatsoever. And now we want to put this back on the level. So this lines here doesn't actually work. It's been tested, retested, moved plenty of times. We don't need them anymore. What we need is this 1.0822 and 1.0812, which is the zone between 50% moving average, 50% Fibonacci retracement, and the 100% moving average. So that's the kind of a nice zone that we want to keep an eye on. So this zone is actually not really useful for us. Now the blue arrows go higher. 1.0898. There you go. This is the key technical resistance and the supply zone. Anything that is going on in between those two zones is purely corrective in nature. Okay, so please notice this. Let me just add one more line here. This will be 50%, 50 points RSI line. There you go. It doesn't have to be that accurate. So 50 RSI points is actually the border between the positive and the negative sentiment. Right now we are approaching the neutral level, going down from the positive territory. If we break, then the outlook will be much more negative. So what do we have here is a potential drop lower towards the lows of the last week, 1.0722, then 1.0695, 1.0674, 1.0669. So there's a plenty of the support relatively not that far away in case of a breakout. And the point is that this movement here doesn't look impulsive at all. We will do some sort of the correction, and then the market should resume the down move. That was the euro dollar. Let's find out what's going on cable. So the cable is in the very different situation, because the bounce, as you can see, from the recent lows located at 1.2517 was pretty impressive, because we clearly covered 50%. So we retraced 50% of the last big nice spike down, right? We hit even the 100 period moving average, 1.2653, but now some sort of the, let me just zoom in, some sort of this pin bar is getting developed, right? So if we close red, no good whatsoever for bulls, because 50% is the most popular retracement. It doesn't matter up or down. And now we got 1, 2, 3, 4, 5 ABC to the downside, and then it looks like there might be some sort of the wedge. So ABC correction might be the one that is right now being produced on the 4-hour time frame chart of the British pound. Let me just make a short-term trend line support. So any breakout below the short-term trend line support would eventually trigger the down move as well. Would basically, let's say, extend the down move, right? So the level would be like this low here, which is 1.2570, and then of course the lows of the swing low, 1.2517. So it doesn't actually looks good, and this movement here doesn't actually looks impulsive as well. So all in all, it looks like the bears are in control of the market. Let's change this line to the blue one so we don't confuse it with the big one. The big one is the orange one. You can see it here. We've been tracking the treatment of the big orange line here, and it was fabulous breakdown below this line. Now we are trying to move higher. Nevertheless, 50% first needs to be violated, clearly violated. Key short-term support is still located between 1.2424, 1.2452. All right, so that was the British pound. Let me just take a look at the US dollar to Japanese yen. What do we have here is clearly simple, because we just moved above the technical support. So we got this big level that used to be technical resistance. Now we moved above this level, 148.82. We made a local high, 149.58. So we almost hit this technical level. So that's the resistance. Resistance is located here, 149.76. So let me just zoom in. So where we are now, we are just hovering around the recent low. Now we are testing the 50 periods moving average. We should see some sort of the bounce soon. Why? Because the momentum is coming off the extremely of a bad market condition. Nevertheless, this is still some sort of the uptrend that is taking place on a 4-hour time frame chart. If we apply our favorite short-term trend line support, eventually this short-term trend line support looks like this, and that means that we can expect this market to bounce from this trend line and move higher. The price range of the recent movement to the downside, so the local pullback was minus 84, And if we just apply this to the recent movement to the downside, we can see that we are definitely not even touching this level, because that would be 148.31. So all in all, the outlook is bullish. We should do some kind of a test. We should bounce from the technical support or the orange trend line support, and then go towards the 149.75 level, which is the next target for bulls. And last but not least, let's take a look at the Bitcoin. All of the Bitcoiners are very happy because we extend our movement above the 100 periods, 100% Fibonacci extension. So now we almost hit the level of 50,000. Nevertheless, there should be some kind of a 127. So I guess that 127% was hit, because this is 161. I can't play with this too much. Nevertheless, it looks like 127% was hit. So now the length of the wave C is 127% length of the wave A. So that's the situation we got right now on the Bitcoin. We can delete our ABC labeling. We can delete our Fibonacci extensions. Now we can place new technical supports. 45,519 is one of them, and 45,946 is the second one. And as you can see, we are keep moving higher. There's some sort of the bearish engulfing pattern at the top of the recent move that was extremely overbought, and now we're coming off. So the market is cooling down after the breakout from the triangle. Nevertheless, please notice the fact that if this is the top for the wave 3 and that's the bottom for the wave 4, we got we might suspect that this movement to the upside is basically impulsive. Nevertheless, we cannot have the triangle in wave 2. That's against the rules. So if this is 5-wave upside impulsive cycle, and this is wave 1, so this cannot be wave 2 because it's a triangle. So the point is, this movement to the downside is the wave A of the triangle, A, B, and C, wave B of the triangle. Now we should develop wave C of the triangle, if, of course, the overall corrective structure inside of the wave 4 is the triangle. So we assume that it is, and we will keep the progress of the development of this triangle, potential triangle pattern on the lower time frame charts of the time frame charts of the Bitcoin, of course. So please stick with me. This week we will follow this situation here on the Bitcoin, and for today that's everything from my side. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.